The US government might finally reopen tonight. But here's the kicker: we could be right back in the same mess by January. Also, Bitcoin just bled down to 101,000, losing momentum fast. Are the bears finally about to flip this market? And the White House just dropped a bombshell. They may never release October jobs and inflation data. That could be huge, for better or for worse. Plus, home builder giant Pulte hints at a radical change to real estate: portable mortgages that let you take your low rate with you. If you care about your money, your home, or your Bitcoin stack, pay attention because everything is connected. What's up, family? It's Coach Masi, and you're locked into the Daily Hodl. This is where we break down the biggest financial news, Bitcoin insights, and market trends so you can stay informed, disciplined, and ready for opportunity. Let's dive right in. Remember, this is not financial advice. It's for educational purposes only. If you love Bitcoin markets, real estate, anything that's real talk about the market, hit that button, subscribe, and share this video with someone who loves watching the economy closely. Okay, the U.S. government looks ready to finalize a short-term deal to reopen. Lawmakers are pushing to get federal workers paid and programs back online. That sounds great until you realize this solution might only last until January. Here's what that means: markets hate uncertainty, and if Congress just kicks the can 2 months down the road, investors will price in another round of fear, volatility, and maybe even another temporary freeze in spending. I think they're opening just for the holidays. But during shutdowns, key reports like GDP revisions, inflation updates, labor data, they're all delayed or not even really promoted at all, like October they're talking about. So maybe we get a relief rally. Maybe we get to see assets bounce for short-term money flows back in the market. The problem: the new deal looks weak or temporary. That could really, fade fast. And why the market is right now cautious? It's not celebrating yet because waiting for clarity till January is awkward. And for Bitcoin, liquidity and confidence, it's all fragile. And reopening means demand is at risk. Let's talk Bitcoin. It dropped to 101,000 today, and now some traders are panicking. Others are buying the dip. Here's what's happening: we're seeing lower highs and consistent selling pressure, which tells us bears are trying to break momentum. But the key metric to watch isn't just price, though 99K is a big deal. It's volume and liquidity. When Bitcoin dips hard, but trading volume is high, that's a sign of active interest. People are still fighting for position. But if volume dries up while prices slide, that's when you worry. It means buyers are giving up and the bears are taking control. So here's the short-term setup. If Bitcoin loses support around 99K and fails to recover fast, we could see a deeper correction before the next leg up. But if we see strong buy-in within the next few sessions, especially from institutional wallets or stablecoin inflows, that's your signal the bulls are quietly reloading, in my opinion. And remember, capitulation is often the setup before the next big move. And historically, extreme fear on the fear and greed index has marked bottoms, not tops. Right now, again, we're hovering low. That's fear for sure, and the fear is heavy, and we're watching to see what happens closely. Let's talk the White House, which confirmed this week that October jobs and inflation data may never be released because the government shutdown delays. On the surface, that sounds like chaos, right? And it kind of is, but here's why it cuts both ways, why it's bad. Without those reports, investors are flying blind, even the Fed is. We won't know if inflation is rising again or if the job market is collapsing faster than expected if you trust the numbers. That means more uncertainty for the Fed and more uncertainty for markets like us. So why is it good? Well, no data can sometimes calm volatility. Traders can't overreact to bad numbers that never hit the tape. It also gives the Fed more time to observe real-world signals like credit stress, retail sales, and wage growth without being pushed by headline pressure. But there's a bigger story here. If job losses keep piling up and we don't see the data, the market could be underestimating how weak the economy really is. That's when surprises happen, especially in Q1. So pay attention, not just to what numbers are being released, but what's missing. Missing data can be a signal in itself, a sign that the system is too unstable to report honestly or on time. Next, you have home builder Bill Pulte hinted that the government may consider mortgage portability. I did a video a couple days on this, meaning you can sell your house and take your low rate mortgage with the next one. That's great. I love this idea. That's huge if it happens. Here's why. Right now, housing inventory is near frozen. Millions of homeowners are stuck with 3% rates and refuse to sell because new mortgages are 7% or higher, or 6.3, or anything in there. But portability fixes that. You can transfer your existing rate to your next home. You free up the market, move up buyers. More people sell, more people buy, and supply starts moving again. It's a creative solution. I love it. Way better than the 50-year mortgages. I hate it, which just push the problem further out. This could unlock mobility, help families move without massive cost jumps, and even stabilize home prices long term. I think Trump might do it. But it's not simple. Banks and mortgage servicers would need to have new frameworks to carry loans between properties. Fannie Mae and Freddie Mac would have to approve the process. And if it's not handled carefully, it could distort lending even more for sure. Still, if it becomes real, this could be the biggest shift in housing policy in decades, in my opinion. And for real estate investors or even first time buyers, it could completely change how how you plan purchases in a high rate environment. So keep an eye on Pulte's comments and any mention of portability from housing officials, because often policymakers start testing that idea, like the 50-year mortgage, and you see what happens. They could extend it, they could freeze it, they could unfreeze it. So everything we've talked about today ties together. Government reopening until January, more short-term liquidity, but not long-term stability. Bitcoin bleeding to 100K shows market is cautious, maybe bracing for a Fed or fiscal policy surprise. And the White House holding back data adds another layer of fog. And Pulte's portable mortgage idea, which is mine, that's a real innovation. And we'll see what happens. So the question isn't, is the market bullish or bearish? The real question is, who's accumulating quietly while the world hesitates? And where are you from? I want to know, because conviction matters. Smart money uses fear to motivate and move wealth, and it's important that you stay informed, patient, and ready for opportunity, no matter where you're from. And that's why I want to know where you're at. So let's talk. I want to hear from you. Also, do you think the government reopening will calm markets or just delay another shutdown? Is Bitcoin showing early signs of a real bear takeover? Or is this just another fake out before the next leg higher? And would you support portable mortgages if it helped unlock the housing market? Answer any of those questions or all of them. Drop your thoughts in the comments. I read every one of them. If this episode brought you value, hit the like button, subscribe, and share this video with someone who loves Bitcoin and financial news. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, lead, pray, hodl. I'll see you in the next one.